You are listening to chartingwealth.com for Monday, the 4th of May, 2015. We are looking, as we always start, with IYY, how it ended the day, ended the week on Friday. Well, I am looking at a screen. If you would like to see the video that we're recording to go along with this, you can always follow us on Facebook or Twitter, or just go to chartingwealth.com. You may be listening to the audio version, so I will explain to you what I am seeing, both visually and in audio. And those of you who'd like to actually see it, it is here. Now, what we saw happen over the course of the prior 2 days to the end of the week, up through the 30th, we saw a big candle down. Now, what do I mean by that? Lots of movement down as far as the price and the overall market went. However, what you saw happen on the 1st of May was a movement totally contained inside the prior down candle. What does that mean? Well, it means that the market tried to move up some and the movement was not very powerful, but it didn't go down again. In fact, overall, the overall market up 1.11% for Friday. Now, what does that mean coming into the next week? Well, we had a crossover going down, as you can see on the 2-day chart. That is the MACD crossed over on the 28th, well, right at the 30th. And today, because of the acceleration down, this is Friday, what you saw happen was there was, it looks like the derivative oscillator is trying its best to flip over going down, but not quite. What does that mean? Well, we're gonna work our way back to the 4-hour or the half-day chart, and what we see is a movement all the way back on the 27th going down on the chart, breaking through our 2-day trend line, which is a blue line that we have on the chart, breaking through that on the 29th, and then substantial down movement the rest of the 29th and the 30th, and then an attempt to move the market up today. Still crossover going down. There is more of a convergence, that is a coming together of the MACD. When the MACD crosses over going down, that's a big sign the market's moving down. And again, this is just a short chart. This is the 4-hour chart. It's trying its best to move up. We don't have anything telling us that there is a correction that's occurred. We just know that 1, 2, 3.5 days prior, there was some significant down movement. The overall market itself on the 2-day chart, as we talked about earlier, is still moving down. You can see it. Now, what does it mean that's going to happen this next week? We're going to have to wait and see. Market is in a down movement overall right now. That's the one thing we need to take from this. Okay, what about the S&P? Now we're switching over to look at the SPY, which is the Spider S&P 500. 500 big companies on the exchange, the S&P 500. What we see happening there is even more interesting than what we saw in the IYY. You can tell right here as you look, as we look, there was a crossover going down between the 28th and the 30th, right around the 29th or so on the 2-day chart. And there was a crossover on the MACD, and it has moved over going down. What does that tell us? Oh, I am wrong. I'm looking at the 50-period moving average. I zoomed in too much. We have not had a crossover going down, actually, on the SPY. We had a correction. We had a breach in our 2-day trend line, but we did not have, let me fix that. We did not have a crossover going down on the SPY. Let's get my own self confused. Just so you understand, when you look at our chart, this black line, and it's marked as the 50-period moving average. So on our 2-day chart, that's a 100-day average. That was crossed over by our MACD line. Our signal line, the red line, has not been crossed. So we are still technically just looking at the MACD in an up move along with the derivative oscillator, even though it's losing its energy. What do we see happen today? Well, the 2 days prior, we saw significant down movement. Today, we have almost a doji. That's what I was tuning into. What is that? It's a cross. We don't have much movement on the S&P up or down as far as opening and closing. We do have technically The S&P was up 1.06% today, but please keep in mind that that movement on today's chart is nowhere below or above. It's totally contained within the prior candle on the 30th, the 2-day candle on the 30th. What does that mean? No significant movement out of that range. That's what it means. We have lost our trend line. Our 2-day trend line is gone. We breached that back on the 30th. And what we're seeing today is, again, if we pay attention to our indicators, which is what we pay attention to the most, we are still technically in an up move on the SPY. Now, isn't that interesting? Let's revert back now to the 4-hour chart. Take a look at that. And we see the up move that occurred was this afternoon primarily. The market opened a little higher than it did at the close yesterday, and it moved up throughout the course of the day. Actually went significantly higher in the afternoon, but then got pushed back down by the bears. And again, we are in a down movement on the 4-hour chart. There was a crossover late in the afternoon on the 28th, and it has continued to move down. It is a down move. Derivative oscillator is reducing its energy as far as the down move goes because of this up move today. And we overall, though, what do we pay attention to the most? Big charts for big money, right? Well, the big chart, according to the indicators, is still in an up move on the SPY. Now let's go over to my favorite chart, the Qs. Cubes, as some people call it. I've always called it the Qs. It's the NASDAQ 100. What do we see here? Again, still in an up move itself, even though we broke our 2-day trend line a couple of days ago. And our derivative oscillator has lost some energy, but it's still in the green. And technically, we are still in an up move on the Qs. Today was a better day than yesterday, up 1.32 again. Our up move totally encapsulated by the 2 days prior down moves. So no strong up movement today on the Qs. Let's look at the 4-hour chart, get a little bit better feel for what went on Friday. You can see as we are looking, if you're visually looking with us on the video, not just listening to the audio, on the 29th there was a crossover going down, and the movement today totally contained within just the candle in the afternoon on the 30th. So again, trying to move up. The 4-hour chart is in a down move, but remember, what do we say over and over? The big chart is the big wave. The 4-hour chart is a quarter the size of a 2-day chart. So this blue line here that we're looking at is our 2-day trend line. It was violated on the 30th. So we'll be looking to draw a new trend line later. We don't have a trend line that we're using right now. So that is where we are on the 3 big indexes that we chart, the Qs, the SPY, and the IYY. Now lastly, let's see what gold is doing. Look at gold. It is finally on the 2-day chart. It's crossed over going down. We saw the derivative oscillator move over on the 24th, stayed negative the 28th, 30th, and today gold, when we talked 2 days ago, we talked about how on the 30th, well, I guess that was yesterday actually, on the 30th gold was transitioning. There was a real question. And as you see this again is a doji. We've got long wicks on the top and bottom. And as we talked about, long wicks mean the bulls were able to push up substantially. The bears pull down, the opposite on the bottom wick. And where we ended up with price movement on the 30th, that 2-day candle, was very little price movement. What we saw happen today was a significant down move in gold, a violation today of our 2-day trend line. Now let's look a little more, and oh yes, also that we have a crossover going down on the MACD. Now let's look at the 4-hour chart. You can see significant down moves both today and yesterday. That is on the 30th and on the 1st. So we are seeing a crossover going down on the 4-hour chart as well as the 2-day chart. Some significant moves finally in gold. It has been trading in a very narrow range over the last several days, actually several weeks, and it's finally starting to move back down. Where will gold go to? Well, if we look at where it bottomed out before, it was all the way down to 111 or so. Yeah, right at 111. It is currently at 112.78, almost 113. I guess it ended at about 113.25. So gold is in a down move. Markets are still technically in an up move. All three of the indexes, gold is in a down move. That's the way we end the week. We hope that you have a great week starting on Monday. Continue to watch the markets. Remember, we are out of the 6 good months. If you pay attention to the best 6-month strategy on page 52 of Jeff Hirsch's book that everybody listening to this program should have by now. If you don't have it, I don't know why. The Stock Trader's Almanac for 2015. He will give you a great summary of the eye-popping strategy they've outlined for using the best 6-month switching strategy. I tell you, you got to read that. If you're listening now and want to get a copy, you can also get a Kindle version. You can also order it at Amazon or at the Stock Traders Almanac website. But again, great strategy for using the top 6 months and getting out of the market, switching over in the month that we're entering into. But we're going to continue to chart the markets for you and talk about stuff every day. Thanks so much for listening. Hope that you had a great week trading and that you have a great week starting this Monday. Thanks so much. God bless. Good trading.